Yeah, hello and welcome to another update video about DOT. DOT chart makes some progress in its correction and has now touched for the first time the yellow support zone that we had on the chart and that ideally was supposed to be reached in the current correction. You can see the market dipped to $7.50. It doesn't look finished yet, but finally we have arrived in the support region. Took a long time, but this support region could give DOT the chance to complete this correction, but we have no confirmation of a low in place. So what I want to do in this video is share with you the two scenarios again and talk to you about the levels that now need to be broken to the upside to suggest a low is in. First of all, the preferred count is, as you know, the white scenario in which we have a 5-wave move up from the October low, 5 waves up in wave 1 in a diagonal pattern, and then this here is a wave 2 correction which likely unfolds as a WXY structure, and this Y wave is an ABC, best I can tell. Yeah, best I can tell. And the idea was that in this structure we are reaching the yellow support zone because that's the standard support zone for a wave 2. But ideally the white zone within the yellow zone, and ideally the price would turn around here in this region between 770 and 586, and then start obviously a third wave rally to the upside. Alternatively, in the yellow count, we have a larger ABC structure, also in a wave 2, which shouldn't be that deep. Yeah, so in the yellow count, it's just a different structure. So this might be with us for a while. If the market can really turn around in this region, then a third wave to the upside might start, or it might be the third wave in white. It will be difficult to determine the difference. Well, we can determine the difference if we look at the structure then of that third wave, because if it's a corrective structure, an ABC, it's the yellow count. If it's an impulse, then we're in the white count. It's too early for that. Does it matter? Not really. The support region is well defined. Looking at the micro patterns here, you can see my best interpretation of this chart was a WXY structure, and in the Y wave we have this ABC structure, and the C wave still seems to be unfolding. And just looking at the target zone for the Y wave, it's between basically $7.20 and $5.86. And the C wave should be a 5-wave move, and it looks like we still have a bit of room to go. So I've got a 1, 2, 3, 4, 5. So it should still come down a little bit lower than where we're now, if this count is correct, the micro count. Main benefit of the micro count is that it gives us an understanding of what are the invalidation points. So the invalidation point of the idea that we should still see a little bit lower is a break above the last high at $8.55. So a break above $8.55 might be an early indication that the low is in on the DOT chart in this wave 2 correction. If that is followed by a break above the B wave high at $9.12, even better. What I will do, I'll take off the wedge pattern of the chart. We don't need that anymore. Price stopped following it, but we've just dipped into support. So that's all okay. And what are the next support levels? Well, below $7.51, we have $7.20. That's a key level. That's the 100% extension level of the wave W. So pay attention to that level. Maybe we'll get a bounce there. Then 665, 651, and then we'll see how far it goes. I mean, I'm not too confident about the microstructure, I have to say that. Best to focus on the fib levels here to see if there are any reactions here. And best to focus on the key levels that tell us that a reversal is happening, which I gave to you as well. That's my update about DOT. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.